Okay, so I just wanted to create a video here to talk about the basics of LLCs, what LLCs are, how they can be used, how we use them, and then I'll probably just interweave some additional information in there based on how the IRS software works, what charging order protection is, how to use LLCs as pass-through entities or holding companies. And it's sort of free form. So I'll talk almost as if we were talking on our initial consultation, but this will save us some time. So what is an LLC? So an LLC is the formation of a particular company. It's called a limited liability company. And basically, what it does is you're creating another person, which is recognized by the courts, and that person is going to have its own set of formalities, formation documents. You're going to have most likely an EIN to file taxes with. And it really it allows you to do all sorts of different things, whether it's hold assets, purchase or sell assets, provide privacy, provide asset protection. So what is an LLC, or really what is a company? I think is really the bigger question. So before states started to charge an individual tax to form a company in that particular state, it used to be something that you would do through a public announcement in the public square, or you would have a court official or some type of an officer of some official capacity to go in and make that announcement for you. Maybe you publish it in a local newspaper and you would just say, this is the formation of my company. It exists and I'm doing business. So fast forward to today, and you have individual states, it's all 50 states, who allow you to organize companies within the statutes of that particular state. And when you go to the Secretary of State's website and you do this formation process, you will pay really it's a fee or a tax, and that tax allows you to receive indemnification from the state statutes of that particular state. So it's become official, and it allows them to charge fees, sometimes on a recurring basis or an annual basis, or if you go in to make an amendment. And then, of course, you usually have to keep it in good standing. Most states require you to go in and do an annual report, although not all do. So the way that companies have been utilized or formed at least has become sort of institutionalized in a way, but again, it does allow you to have indemnification under those state statutes, so it is a beneficial thing to do. I don't ever recommend someone to be a sole proprietor or just operating under their personal name just because of the liability and lack of privacy that's involved there. So, what are we going to do? How are we going to form this company, and how is it going to help you? So, the way that we approach our LLCs, at least the tax immunity or pass-through holding company that we create, it's going to do a number of things for you. First of all, it doesn't matter if you're a business owner, it doesn't matter if you're an employee or you have side hustles or whatever the case. Okay, every person should have an LLC and use it in this way, at least in my opinion. So we would create the LLC for you, and that LLC, you'll have a bank account, you'll use it to set up other accounts, and you can even use it to own insurance policies, whole life insurance policies, which is something that we can talk about. But basically, what it allows you to do is it allows you to create and manage money through that particular LLC and then move it to different destinations. So the way that we will do this is usually what will happen is your LLC will be owned by your private membership association, so a PMA of your choice, or you will have more than one person as an owner of the LLC, a member owner, and that will give you charging order protection. And by the way, it's got to be two or more people, and they cannot be married. So if you are married, the courts consider you one person, a husband and a wife, and you won't receive that charging order protection. And but that's what allows you to protect assets. And again, if you use a PMA, it can actually provide privacy as well. So, just a side story on that. Now, as a real estate investor in a bunch of different states, I have property managers that I use, and I leverage them as much as I can. Well, every so often you're going to run into a property manager that doesn't do their job. And in this case, I had a property manager who didn't hold up their end of the contract that we had agreed upon, but yet they were still trying to assess fees. And they basically told me that I owed them thousands of dollars. And I don't mind paying somebody for their product or services. Of course, I pay my bills, but if somebody is going to basically take my money from me and then not deliver on what they said they were going to deliver on, well, obviously I'm going to have a problem with that, and I'm not going to pay that person. So they told me that they were going to send it to collection over and over. I basically said, fine, send it. And that's exactly what they did. So I had a third party creditor come after me trying to tell me that I had to pay thousands of dollars. But the interesting thing about that is because of the way that I filled out my W-9 with the property manager, and this is something that I'll show you how to do, that property manager really didn't have any pertinent information that they can give to that third party creditor. So the only thing that that creditor could do was refer to me as my LLC's name. And they had the LLC's EIN number, not my social security number. So they really weren't able to put anything on my credit report to draw me in. So there was a level of privacy there and anonymity. And then I responded to that third party creditor with asking them a bunch of questions like who they are, first off, because I've never heard of them, and how did they get my information? And that was another thing. And it was one of the things that I asked was, how did you get my information? And cited a particular statute which basically told them that they could be sued for identity theft. So I sent off that letter to that third party creditor and never heard a thing again. My credit was protected, and the property manager will never get paid. So these are things that you can do to start really winning at the things that you should be able to win at. So that was one example of asset protection and privacy that you can get by setting up this LLC. So basically what this company is going to be for you is it's going to be a holding company, which money can flow into on a post or a pre-tax basis. And then you can decide what you do with it from that point. This LLC will not file a tax return because it's a holding company. So if you're using holding companies or pass-throughs as they're supposed to be used, you don't file taxes with them because it's the money that flows to either your personal account or another company that does file tax returns. That is how you're going to report the income. So, for example, if you make $1 million for a calendar year and it goes into your holding company, and you only need, say, 100,000 of that to live, and you transfer that into your personal account, well, then you would put that on your 1040 as $100,000 of other income. Meanwhile, the other 900,000 is sitting in that holding company. And again, this is your election of tax treatment. A lot of people, what they do is they say, "Oh, well, I made $1 million in this holding company," and they report the $1 million. But that's just a choice. That is a particular tax treatment, and a lot of people think that that's really the only way that it can be done. So what I will show you how to do is to use the LLC in this way. All right, it'll show you how to put money into it, and then how to reallocate it from there, even tax deferred or permanently tax deferred. So there's many things that we can do here, many examples of this. So that's the first thing. Another thing I'd like to talk about, it has to do with the IRS tax software. So when people file their returns, they aren't there's not some IRS agent who's just sitting there at a desk waiting for it to come in and then reviewing it. That's not how it works. What they use is they use software. And that software is designed to look for anomalies and look for things that don't quite add up. And then that's what flags particular tax returns if you're not randomly selected. So it's important to note, though, that if you're an individual person and you've filed a tax return at least just one time in your life, um, from that point forward, what the IRS does is they create an individual master file on you. So anytime for the rest of your life, if you get a 1099 or a W-2 in your personal name against your social in particular, then that will go to the IRS and then they will expect you to reconcile that tax form at the end of the year when you file your 1040 or your tax return. So, however, if you never file a tax return, okay, so for a kid right now who's turned 18 and never filed a tax return, he can technically go his entire life not filing tax returns, and the IRS won't even know who he is. So even if that person were to receive a W-2 or a 1099 when they're 30, it's going to go nowhere. It goes basically into a black hole because the IRS software has nothing to link it up to. So in reality, you create your own tax liabilities by filing taxes. That's something that's very important to note. And so anyone who's concerned about having a holding company that doesn't file tax returns or multiple holding companies that don't file tax returns, it works the same way for a company. Okay, so let's say you have an LLC, you get your EIN, and you put $1 million into that thing. Well, you don't have to file tax returns with that holding company. And so there's never a business master file that gets opened on that particular LLC. So this is a very important point here. So therefore, if you receive a 1099 against that LLC, at the end of the tax reporting period, there's nothing to reconcile because the IRS has nothing to tree it up to. It'll just fall out of the software, basically. The software won't keep it, it won't store it. That's it. Until you file a tax return with that company, they won't have a master file to sync it up with. So there will be nothing for you to reconcile. And there's nothing illegal about that. There's nothing illegal about not filing a tax return with an LLC or with a holding company. That has to do with personal preference when it comes to tax treatment. So this is just something that I wanted to clear up. I know that there's a lot of confusion or questions about that. Again, if you have your LLC and you're using it as a holding company, you do not file tax returns with it because that can actually cause other issues with tax returns that involve yourself or other LLCs. So I guess I would leave it there for now, as far as how the IRS's software works. But you can use these LLCs for all different things, whether it's buying or selling real estate. Cryptographic currencies, by the way, is really something that we've been doing quite a bit of. And I know that a lot of you have had questions on this, but the cryptographic currency use, or at least the use of trading in and out of cryptographic currencies with the LLC, there is actually a trust component within this LLC in the operating agreement and the way that that's written. So I will go into more detail about how we best utilize the LLC, how we work with the exchanges, and then we can go from there. But again, that's typically what people want. They want to have it for cryptographic currency or even stock trading, options trading. It can work for that as well. It really can work for just about anything. So more to come on that. I hope that this video was helpful. and look forward to releasing more content soon.